It may have come at the 11th hour, but the major banks have lifted the gag on staff and victims ahead of the Banking Royal Commission, which begins next week. Peak union body, the ACTU, had fears people would be prevented from telling their stories because of workplace confidentiality agreements. There's an expectation new cases of unscrupulous sales-driven behaviour will emerge over the year. Tonight, Andrew Robertson investigates the case of a 22-year-old living at home who was given a personal loan by the NAB that she couldn't pay back.
It's people like Amy Neveson-Smith who'll be hoping the Royal Commission leads to genuine change in the banking system.
I wasn't actually expecting to get approved, and somehow I did.
What 22-year-old Amy Neveson-Smith got approved for by National Australia Bank was a $35,000 car loan at what's now 16% interest. At the time she got the loan last November, Amy had just started her first full-time job. She was on probation and had no guarantee of ongoing employment.
I was in there for maybe about 20 minutes and then I was out after having been told I was conditionally approved for the loan, having no credit history or anything like that.
That's the big one there.
Despite also having a very poor savings history, Amy Neveson-Smith was sold a credit card as well. And then a few weeks later, without warning, a taste of what can be a very harsh lending world.
15th of January, they've bumped your interest rate up 1%. Now it's gone from 14.69 to 15.69.
Greed comes to mind. So that's the first word that comes to my head is greed. That's cloud.
Amy Neveson-Smith's parents are trying to help her out of the financial mess she's in. They're not just puzzled by NAB's behaviour, they're angry.
I think it's actually appalling. I'm disappointed, I'm upset that she's been allowed to get a loan, a personal loan for that amount of money when she has limited income, she has no money, no savings record, still living at home and we're still supporting her.
Amy Neveson-Smith is not alone in being allowed to borrow money she's not suited for. According to the latest available figures, there's been a 76% increase in complaints about banks breaching their responsible lending obligations.
The financial sector in Australia is becoming more and more focused on lending because essentially that's the only profit-generating game in town.
The government worked hard to protect the banks from a Royal Commission, but the weight of evidence of dodgy lending, financial planning scandals, insurance rip-offs and breaches of money laundering laws forced it to cave in. When it starts on Monday, the Commission has a wide-ranging brief to look at the behaviour of the banks as well as compensation procedures and how the sector is regulated. It will be headed by retired High Court Judge Kenneth Hayne and will only have a year to complete its work, far less time than most other Royal Commissions.
I wonder whether it will spend a lot of time bouncing across multiple issues without necessarily getting to any ultimate conclusions.
On the issue of a political fix, the ACTU says events of the last 24 hours have reinforced its concerns that banks want the Royal Commission to work for them and not the public. With the Commission just days away, it took pressure from unions to get banks to waive non-disclosure agreements, which would have stopped many people who've been hurt by bank bad behaviour from giving evidence.
We are very concerned that this is a staged managed process that is about bankers and lawyers telling their story that they want us to hear, managing it and going forward to try and quell the right concern across our community about what's been happening in this industry, about the stories of injustice, predatory lending practices, just outrageous behaviour that we heard over the back end of last year in particular, that has raised concerns across our community about what's happening in our banking and finance sectors. And that is something that we cannot let happen.
Superannuation is another thorny issue, and the government has made it clear it's targeting industry funds, which are a partnership between unions and employers. That's despite repeated evidence industry super funds outperform bank-owned funds by 20% over 1 year, rising to nearly 70% over 10 years.
A question about industry super, I think there's very little evidence to support on the basis of member outcomes and member interests that's an appropriate line of inquiry.
Despite his concerns about what the Banking Royal Commission may achieve, digital finance analytics Martin North remains hopeful.
It could be that we get sufficient information and evidence that it really does begin to tip the balance over, and you can't just ignore it. So that could be the 20% chance of getting some real change out of the back of this.
I think the Royal Commission will be important to look at the banks and to look at their culture, to change the culture on how they look at individuals, so that people like my daughter won't end up with this ridiculous loan that she's been able to take out so easily.
A spokesman for National Australia Bank said the $35,000 loan to Amy Nivison-Smith was based on information she provided. NAB declined the ABC's invitation to appear in this report, but it won't have that luxury when it's called before the Royal Commission.